All right, let's jump in with this OpenAI stuff, and I have to give credit here to Matt Levin, who has a column today in Bloomberg. Matt is probably the most interesting writer on financial issues out there today. Always interesting, and he wrote up a whole thing about Musk's bid for OpenAI, which I thought was quite interesting, and yeah, a real interesting spin on what is going on, and I think a true spin on what is going on. And what Matt gives the example of, when Elon Musk bought Twitter in the spring of 2022, he basically went to Twitter and said, I'm offering $44 billion to buy the company. And whether he thought they'd accept it or not, or would go through or not, whether he regretted it or not, doesn't matter. Basically Twitter, the CEO of Twitter at the time, took this to the board, and they hired bankers, and they went out and they thought, could we get a higher bid for this? Is there anybody conceivably who would pay us more than $44 billion? If we didn't sell to Elon Musk, could we expect to reach a $44 billion valuation in the future, given the business model, given the trends, given everything? And then what is our fiduciary duty? What is our responsibility here? And they basically came to the conclusion, the board of directors came to the conclusion that no, nobody's going to offer more than $44 billion. And no, they could not conceive of a future where there was a high likelihood that they would reach $44 billion anytime soon. And basically, as the CEO, Parag Agrawal, stated at the time, the board's job was, quote, to act in the interest of our shareholders, look for value for them in the long term. And clearly, Musk offered the greatest value long term for Twitter, and they sold. And now you could argue, I've always argued, yes, this is the responsibility of managers, unless there's something bizarre, weird, or strange going on. Ultimately, the responsibility of the board of directors is to manage the company on behalf of shareholders and to maximize their long-term value. Now, a lot of discussion about stakeholder capitalism, and you shouldn't just consider shareholders, and a lot of people come up with, a lot of founders, for example, don't sell their companies usually because they believe they can create more value, but sometimes because they have a certain vision, they want to execute on that vision, they don't want the company sold, and they can kind of justify it, although they can be sued by shareholders if they don't try to maximize the value for shareholders. But sometimes they have wiggle room. But with a publicly traded company, it's pretty clear. Certainly a board of directors can say, we're here to maximize shareholder wealth. This is a maximize shareholder wealth decision. Offer, we're taking it. There's no question. And that's, again, what Twitter did. Now you've got OpenAI. Now, OpenAI is a nonprofit organization whose fiduciary duty, according to its own charter, is to somehow maximize, the social benefits, societal benefits of AI. And a nonprofit organization, and basically Elon Musk has come to this nonprofit and said, I will buy from you your product, OpenAI, for $97.4 billion, and you can, in a sense, take this $97.4 billion, right? You can take this $97.4 billion, and you can use it for for nonprofit initiatives to make the world a better place, to benefit society in some way, but you have to give us OpenAI. Now, what is the fiduciary duty, and how does a board decide such a thing? Well, it's just not clear. And indeed, I don't know of any other example ever, maybe. I don't know of any example ever. That doesn't mean there wasn't one. But I don't know of any. And I have to say that Matt Levin, who's pretty educated in these things, doesn't know of any example of a nonprofit having a hostile takeover. Now, that's probably because most nonprofits don't have a business that they can sell. They don't have OpenAI, which is worth a lot of money. Maybe it's worth $97.4 billion. Well, it's worth more than that, but that's the stake the nonprofit has in it. So, basically what Elon Musk is offering is to buy the nonprofit's control over OpenAI. Now we have to unpack this a little bit to understand exactly what is going on here. Okay, so here's kind of the weirdness of this situation. OpenAI has created a for-profit subsidiary. So it's a nonprofit that controls a for-profit subsidiary where OpenAI, where the AI platform, the software sits. So they've created a for-profit subsidiary, and that for-profit subsidiary has investors, which is bizarre. We talked about this a while back when there was a whole scandal of the board of AI trying to fire Sam Altman and all of that. We talked about the weirdness and complexity of the structure. Like Microsoft is a big investor in the for-profit subsidiary, and they have some quasi-equity profit shares in the business, but it's not clear what it all means. It's very vague and legally mushy, murky. And you've got Microsoft, a big investor, some of the big venture capital funds are investors, but OpenAI controls it. It basically has a controlling stake in this. OpenAI is also in the process of raising money for the for-profit subsidiary, $40 billion, primarily from SoftBank, Japanese SoftBank. Although, who knows? Trump might say, no. Japanese companies can't buy American companies. I don't know. Who knows? All right. Now, here's the problem. What OpenAI would like to do is spin the for-profit business out. It would like to privatize the for-profit business. It would like to make it a fully for-profit enterprise with no control of the non-for-profit. But legally, it cannot do that. It cannot just give it away to private investors. That's called private annulment. It's called, the purpose of the nonprofit is to benefit society, and now they're benefiting a few investors. So they're not allowed to do that. So what they can do is they can sell, in a sense, they can sell a portion of their stake, and they can take shares in the new for-profit entity. And the idea here is that OpenAI, the nonprofit, would own 25% of OpenAI, the business. So it would give up control. It would become a wholly for-profit business run by a board of directors. Ultimately, it could go public. And the nonprofit would own 25% of the shares of it. And, now it's going to get a lump sum in order for it to give up control. What is control worth? And in order to give up control, what they're thinking right now is that they're going to get $40 billion. Right? So what would happen, given the scenario, is that OpenAI would go to the negotiating table, the new for-profit entity would go to the negotiating table. The investors, existing investors like Microsoft, would go to the negotiating table. They would all negotiate for a stake that OpenAI has. Let's say it's 25%, and money that would be given to the nonprofit by the new investors. The current valuation before a new investment is made is the current valuation is $260 billion. $260 billion. That would give the nonprofit stake, the 25%, a valuation of $65 billion. So that's what OpenAI thought they were doing. They were going to this negotiation. They were going to get 25% of the company. It would be worth $65 billion over time. They could sell that stake, use that money to do whatever philanthropic stuff they wanted to do. But then Musk comes in. Musk comes in and he says, wait a minute. I think you're giving this away. I think it's wrong for all these parties to be negotiating about the stake of OpenAI. Ultimately, the public, quote, the public, is the owner of the nonprofit, right? It's the beneficiary of the nonprofit is the public, society. And you're selling society the public short. We think a controlling stake in OpenAI is worth a lot more than $65 billion. We think the controlling stake in OpenAI, in the for-profit entity, is worth $97.375 billion. And indeed, if you can find somebody who bids higher than that, we will probably, or at least consider, matching that bid. C.S. Sam Altman, who's the founder of OpenAI and the CEO of OpenAI, thought that he had arranged this cozy deal and that everything was going to be sorted out and that the nonprofit was going to be relegated to 25%. He would have this company. He would continue to control it. He would continue to run it, and there would be this, and all the numbers are figured out, and everybody's happy. And wait a minute. Now the board of directors has a real conflict. It has to weigh two alternatives. One alternative is it gets a stake in OpenAI worth $65 billion. The other alternative is it gets cash of $97.375 billion. Let's call it $100 billion, just for fun. What maximizes the well-being of society, which alternative? So is the board of directors of the nonprofit obliged to take Musk's higher offer? Is it obliged to follow through with the deal that it already has or it's about to negotiate? Why? By what standard does it measure these things? Now, part of probably what's going to happen is that whereas you might have expected OpenAI stake in the new entity to only be $65 billion, it basically what Musk is basically doing is forcing a renegotiation or up the negotiation, where now it's likely that at the end of whatever the negotiation is, the nonprofit will own a stake greater than what Musk is offering in order to legally be clear, right? The nonprofit could then say, look, we got $100 billion from the for-profit business. We have a stake worth $100 billion. We don't need to accept Elon Musk's. Now, this is fascinating because there's a sense in which what Trump is doing here is he probably doesn't want to buy OpenAI. He has his own AI company that is a competitor. What Musk is probably doing here is not trying to buy OpenAI, but raise the price. Is, just be a thorn in the side of Sam Altman and OpenAI's board, which he is, by the way, suing because he doesn't like the whole arrangement anyway. He was one of the founders of OpenAI with Sam Altman. He left the board and has fought with Sam Altman, and you can still see they continue to fight online on Twitter all the time. This is basically the most money ever used to troll another human being in history. He is just harassing Sam Altman and the board, right? Here's what the Wall Street Journal wrote. Right? The higher the valuation of the nonprofit, the bigger its stake would likely be in the for-profit OpenAI following a conversion. At the same time, OpenAI is negotiating how much equity Microsoft, its biggest investor, should get in the for-profit company, along with other backers and employees. It is also seeking to raise up to $40 billion of new capital. Investors in that round will likely expect equity when OpenAI becomes a for-profit as well. Satisfying all these parties has been already complicated. If Musk's gambit increases the equity awarded to the nonprofit, it will be even more difficult. So, Musk here, Musk is dabbling in everything in the world right now. But on the side, kind of just for fun, he is doing whatever he can to piss off Sam Altman. As Sam Altman said in an interview with Bloomberg, quote, "I think he's probably just trying to slow us down. He obviously is a competitor." He says, "I wish he would just compete by building a better product. But I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this." And then he goes on to say, this is the level of kind of fighting between Altman and Musk. Altman continues to say about Musk, probably his whole life is from a position of insecurity. I feel for the guy. I think Musk is an unhappy person. At the end of the day, Altman said, OpenAI is not for sale. The OpenAI mission is not for sale. But you gotta believe that the nonprofit's obligation, the board, it has to be to maximize the value given that it's trying to benefit humanity. And the benefit of humanity, they can do more if they have more money. So how do they weigh the different considerations? The deal they have to cut with the other investors at OpenAI for profit, the money that Musk is offering them, everything else that's on the table. It's a fascinating, really fascinating issue. And of course, I'm not even counting the question, or not even considering the question of does Musk even have the money? That I'm sure he could raise the money, he could sell enough stock and come up with $97 billion. But a bank's going to lend him money for this? I mean, do a leverage buyout of a nonprofit? That's never happened before. Does he have enough money committed, enough equity committed, other investors? This is one of the weirdest takeovers in all of history. And it's going to be super interesting and fun to see what happens. But I really do think that this time, Musk is just trolling. He's just harassing Sam Altman and the OpenAI board. And It's crazy. Entertaining, I have to say, like everything these days, entertaining and crazy. And crazy. So I expect OpenAI will reject the offer. It'll be interesting on what basis they reject the offer. I do expect, though, that this will force them to increase the valuation, the value of the stake that they get in the full profit. So I do think that this is going to create a lot of complexity in the negotiating for the spin-off of the for-profit arm of OpenAI. Anyway, hopefully that all made sense to you guys. I never know, once I dig into these finance stuff, if you guys are actually following or not. I assume you are, because I look at the chat, and the chat's all over the place. So, but I hope you are, and I hope you found that interesting. I think it's fascinating, and I'm looking forward to following this and keeping track of this and seeing what happens. And I will fill you in as I learn more about the travails of OpenAI and the troll, Elon Musk. All right.